Midday update for the stock market is 10:57 a.m. Eastern Time, Wednesday, July 24th. I'm Rich Paz for Critical Point. Audio update. Okay, looking really ugly out there, down 80, 85 points in the S&P 500, 400 points in the NASDAQ. So, bottom line is, it looks like the market failed on its attempt to get back above the 20-day moving average. They're now targeting the 50-day moving average of 54.29. Okay. Now, we also have targets for 5,400. We also have targets that might be as extreme as 53.68, 53.30, and 52.93. There's also the possibility of looking at April lows and June lows, and so anywhere from 5,400 down to 5,200, maybe even 5,000. Lower you go, the more you're getting towards extreme that really shouldn't occur, but it's on the table. Rising opportunity that we've got a -7 to -11% down move coming here. Okay, and they may get this done sooner or later. However, they could put the brakes on at any moment and turn things around when we have to consider, some corrective bounce along the way at times. But overall, we have to consider they might just want to keep pounding at it too. Even if we get these corrective bounce, they could pound at it later. So what we're looking for the Dow Jones Industrials is a good possibility of going to like 39,000 back to 38,000. Okay. Now, next up is the NASDAQ. Let's see, that's the futures. I want the cash. So on the cash market, what we have is downside targets of 18,550, 18,200s, 18,000 round number. In other words, take it back to March, April highs, okay, and maybe a little below that. Now, some of this could wait all the way to late August to September. We're now putting late August, last week of August, in with September for a level 1 bottom. Now, tomorrow in the weekly update, I'm going to have an announcement when I think we're moving rapidly from a 1995 into 1996 and moving rapidly that we are in the minor long-term bear market and may get it over sooner than what I've been talking about. I think we're rapidly moving from 1925 into 1926. This could be a gamble, and we really shouldn't do anything about it until the end of this month to September. But we'll work on that, and again, I'll explain that in greater detail and show some charts. This could be a fascinating time. We may be in that 2 to 4 month slot I was looking for a minor long-term bear market, when I thought it's either going to take quite a bit longer than that, and therefore broken up, not work so well, and also thought it might not even start to November and go on into early next year. That's still an alternative possibility. The market may change its mind and go with that scenario. But right at the moment, I think this market is serious about getting at least 5% drops, but I think it wants that round number -10%. And I think it wants to get it over quickly. So on a short-term basis, the model is saying, hey, trigger the time stop. The market, we should not trust bullish scenarios from now into early September for the larger trends. In addition, it's saying it probably was a level 3 bottom last week, level 3 top already this week for the NASDAQ, and the trend for the NASDAQ is down into next week. Now, the S&P 500 was supposed to be up into next week. We said we're concerned it's not going to work, and that the NASDAQ can be the weakest and the leader and push and shove the rest of these indexes around and drag them lower even. If we get the bounce next week in the S&P 500, I think it'll just be down later, and it may not be as high as the price of this week. It may be at a lower price, simply doesn't work. I don't trust it. I'm focusing more on the NASDAQ now, being bearish into next week and probably bringing down the S&P 500 and the Dow Jones Industrials. And I think they're probably even selling a lot of those stocks they bought across the board now. But so far, the equal weighted index is holding up relative strong. It's really more of the NASDAQ and NVIDIA and Mag 7 are getting beat up here. Also, remember, Tesla has been beat up and a few others, okay? So that's our scenario here down into next week. Then we could talk about maybe some kind of recovery, some stability after the Federal Reserve. But I'm a little suspicious we'll see another wave of selling by the end of August, early September. and there may be even other few waves through there. But I'm wondering if they're just going to try to get the worst out of the way as soon as possible, maybe as soon as going into next week. This thing, it's like it just suddenly lost its demand and suddenly and increased the selling, and it's lost its floor. It's almost like a miniature little broken market. This might drop severely quickly, but yet that might do some interesting things for our long-term bull market that we'll discuss tomorrow. The VIX is up as I said it would be model-wise, maybe a little stronger than what I wanted to see. And maybe that's also a sign we got a little more VIX to the upside here, also going well into August, and also, therefore, lower stock market. Okay, so that's what the update for that. And then if I check on the interest rates here, just easing back. They're kind of stuck in the nowheres. They really don't know what to do. I think they'd like to wait in the Federal Reserve. But the stock market folks, they're not waiting. They're doing their own thing. And actually, as I look at NVIDIA, it's trying to hold on to last week's low. But I think it's going to give up. I think it just put a level 3 top in. I think it's going lower into next week. But I needed to go a little lower here, provide some advice. Now, the Mag 7 fund that blew through last week's low, it looks dead serious here. Again, I think we got problems and messiness for quite some time. But on a very short-term basis and very near term, I think the highest probability scenario is be cautious about buying now in the next week. I think there could be some considerable downside yet here. Past results are not necessarily indicative of future results. Have a great day. Thank you.